Hey guys, welcome back to the channel. Welcome back to another video. And today I want to talk about why the opportunity that's afforded to us in the stock market with all of the volatility right now is the perfect time to start investing and building your positions, whether you're a beginner or somebody that's already seasoned as an investor, what you should be doing or what your plans might be towards moving forward as we go into these uncertain times. Now, to begin with, are we in a recession? Are we not in a recession? You know, with the numbers that the Fed's saying, and you know the hike rates with taxes, a lot of people are confused. A lot of people don't know what's going on. A lot of people think that the stocks will drop more, or this is just the beginning, or hey, this is all fake. You know, I heard somebody say that, oh, this is all fake, and we'll go, and the stocks are going to take off, and the rich are saying this to get richer. Listen, anytime you deal with life or you deal with stock market, you're going to deal with three things: fear, curiosity, and the other thing is desire. Yeah, we'll say desire. Fear, curiosity, and desire. Some people want to invest in the stock market, you know, and all three of those factors play into it. In anything you do in life: fear, curiosity, and desire. How so? I'll give you an example. I get people telling me all the time, oh, I want to invest in the stock market, right? You have a curiosity, right, of how it works and how it could work for you. Then you have the desire because you see the benefits of other people making money and getting wealthy, you know, and building a financial, you know, foundation for themselves, you know, in the stock market. But you also have the fear. Oh, what if I lose all my money? What if I do this? What if I do that? You know, what if this happens? What if that falls down? You can't be like that. Because when you're going outside to go to work or walk to your car, all three of those play a factor. Desire to go to work, fear that something's going to happen, and the curiosity to how your workday is going to be. At any given time, two of the three can take hold, or one of the three. But either way, it's just how the mind works. But I'm getting a little bit off track. This is the first reason why I say it's a good opportunity for a new investor or somebody that's thinking about investing to go and set up your financial account and jump right in it. Now, S&P, NASDAQ, all of the major indexes continue to fall, right? The market is uncertain. There's a lot of uncertainty in the market. But this is the time when people that are wealthy or people that know how to invest, they're going and they're buying their favorite stocks. They're putting more money into, you know, positions that they're holding. When I say positions, I'm talking about, say you got 4 or 5 stocks. Those are called positions. They're putting money into those positions, meaning buying more stocks in that sector, in that name, and they're building up their position, which is their stock share amount. They're building that up because as the stocks are falling, a lot of people bought when we had the bull run a couple of years ago, where the stock market was green all the time. So every time you were buying at a higher level. You were buying at a higher number. So your to get your stock appreciation to come up as the market's going down, you buy more shares of stock. I think I said that right. But I might have said it wrong. But yeah, what I'm trying to say is it's a perfect opportunity now. Stocks are on sale. You know, you'll hear people saying, oh, the market is down, especially when you watch shows like MSNBC, which is a good show if you know how to look at it. You'll see them talking about, oh, the same three things. Like I said, fear, curiosity, desire. You know, you got to remember, it's a media company. A lot of influencers on YouTube are talking about, hey, these are the top 5 stocks that I'm going to buy. You have to look between the lines. Those are top 5 stocks that they might be buying, or they're considering buying, or they might, you know, just bring to your attention. Can't follow anybody in this position. You know, in this, you can't follow anybody in what they want to do. The stock market's about what you want to do. With the uncertainty in the market, stock prices are dropping. With stock prices dropping, you want to take the time, That means they're on sale. You want to take the time and say, okay, well, I like such and such company. I always wanted to own this company. Or, man, I'm going to look into this because the price is low. And you strike. Another thing is when this writes itself, a lot of people are going to come up big, gain wise with money. Their money's going to grow quick. Studies show that every time the market has a serious dip, and this happens like every 5 years, 4 or 5 years, it might be 3 years, I'm not sure, but every 4 or 5 years, the market will have a dip. And when it has a dip, it'll rebound and it'll take off. And then it'll go to another height, and then it'll have a dip years later. We're in the point where we're having that dip. This is when you want to jump in and consider looking at your favorite stocks and picking some stuff up, and then add to position every month by a dollar cost averaging, where you put a little bit of money into your financial account, and then by you putting it in your financial account, you're just buying 1 or 2 shares. I mean, you can see it. A lot of YouTubers do it, which is good advice to a lot of YouTubers when they show, hey, I bought 1 or 2 shares of this stock this month. Next month, I'll buy 1 or 2 shares of that. Listen, it's not a sprint, it's a marathon. To build positions, you work with the money that you make, your financial situation, whether you got 1 stock or 1 million stocks. Always remember, you're always in the race. You're always in it. Different. Now, somebody may have more shares than you, which I could never understand. People think they have 1,000 shares and you got 100 shares like you nothing. Like, I don't understand that. You're still investing in the same company. All you're doing when you're buying a share is a small stake in the company. As you increase, the more money you put into buying shares, the bigger the stake is. Don't stop. Don't stop. Don't stop. Long term, you won't regret it. It'll always pay off. It will always pay off for you. Investing is a waiting game. It's a game. Like I said, it's a marathon. Me, I do long-term investing. Why? Because I feel that's the safest for me. I buy a stock, and then every month I put money into the stock or stocks in my portfolio, depending on which ones are up or down, and I just let it go. I don't think about it. I invest in good companies I know will be around tomorrow, that I know have good management teams, they're run correctly, and they're household names, and they're part of American, just the American fabric in the way America operates. Waste management, dealing with trash and sanitation, Procter and Gamble, just to name a few, household items that, that'll be here. And it's a part of just, my existence, things that are necessities for me and other people. Another thing, like I said, long term, you won't regret it. When this thing writes itself, a lot of people are going to make a lot of money. You can build your dream portfolio now because all the stocks are falling. Hey, I always wanted to own Apple. Hey, I always wanted to own this stock right here. Man, this is at a discount. And then doing your research, you might find something else that you always wanted. You can build your dream portfolio right now, and it'll do you justice. And then, I mean, one share at a time. You buy a share of one stock that you like in the one sector, buy another share of another stock in another sector. It'll pay off for you. And then just dollar cost average every month. Don't even look at whether it's red or green. You just keep buying. You do your research. You have patience, and you just climb with it, right? If you're a beginning stock investor and you don't have that much money, you can jump in with $100. I think it's now $50. Depending on what platform you have. I don't know. You might have to forgive me. I don't know, but don't delay, guys. Don't delay, because the time is now. I'm looking up here, and S&P 500 and other major indexes are continually falling. And you don't know how long this is going to last. And usually the day when the market corrects itself and it takes off those first 3 days, a lot of times people are not even aware of it unless they have stocks or something, and you'll be knocked completely out of it because you wasn't even there to even just stake your claim on one of the few business days that are best when the market corrects itself. And then not always in the beginning, but you always have to be in there, because nobody can time the market. You'll hear people say, oh, you can beat the market. You can't. It's like rolling the roulette wheel and saying, okay, 6 is going to come up. Nobody knows. There's too many randomness, and you don't know everybody's marketing strategy with trading. Every day is impossible. But, another thing, and this is the big thing I wanted to get into, it gives you time because the market is going down. It can't get no worse than it is. It's going to be in the red regardless. But jumping in now, like some of the famous investors tell you, it's no way to time the market. So the best way to do it is just jump in the pool. Now, whether the water's too hot or too cold, you won't know unless you get in there. And when you get in there, if you have patience, it's going to straighten itself back out. Don't panic. If you have stocks right now and you're seeing that your stocks are down 40, 35%, it doesn't make the company bad, especially when you did your due diligence and your research, when you came up with the concept of, oh, I'm going to go get this stock and I'm going to just wait it out. If you have a long-term, multi-year horizon, it doesn't matter. Buy, believe in yourself, believe in your research, believe in the company, stock up. When your stocks are red, that's when you go out and you strike. You get all these shares that you can get, and then you wait. Because when this thing flips around, and it's going to do it quick. Now I'm not saying tomorrow, but when it does turn itself around and the bull run starts, that's when everybody gets excited again. See, around this time, people get quiet, especially a lot of the people that make a lot of money in the stock market. Why? Because they over there doing what they supposed to do. Okay, I'm gonna be quiet. I'm gonna get my stocks right. Boom, 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 boom. I'm gonna let all of the small time inexperienced investors watch CNBC and panic, because panic is good when you know what you're doing in the stock market. And it sounds messed up because you don't want to pray for a crash, but a lot of people, when we're in a bull run and it's taking off too much, a lot of people are like, oh man, these stocks need to come down so I can, really take advantage. You don't take advantage when the stocks are green. You might get a little bit of gains, but if the stocks are going up like this and you buy in at this point and it goes up just a little bit and it drops and you way up here, like I always tell people, it's a scary feeling. And then you come down, they gotta wait till it go all the way back up. It might take a couple of years if you're holding the stock, and then the past where you're at, then for you to take off and continue your gain momentum. It's not like that. You can buy on the way down. You can buy on the way up. It's just all comes down to your patience, how much you can stomach, and the risk. It's only risk when you sell the stock. If the stock goes down 40% and you sell it, that's on you because you lost 40%. You didn't have to sell. You could have waited. Always remember something. One bit of news that you hear, it's not going to be detrimental to the whole company a lot of times when it's something silly. Like they just had I think over the weekend, some news about Apple saying, hey, telling everybody to, reset their phones because of a security breach or something. Now I don't know what Apple stock is going to do today, but I guarantee you a lot of people are like, oh, I'm done with Apple. I'm selling. Everybody's market strategy is the same. It's not the same. And everybody's risk tolerance is not the same. Just because the stock is in the red 2-3 days in a row does not have nothing to do with the company basics, the way they run the company, or the sales they're making on that day, or the basic operations. Take the emotion out of it when you're dealing with the stock market. Another thing is this. The reason why you want to jump into the stock market now, or experiment with your favorite stocks, or this is where you gain valuable experience in the stock market. I cannot stress this enough. If you make mistakes in the stock market, right? A lot of times the mistakes that people make are due to picking the wrong stock or picking a stock too quick. Like I was vulnerable with that. When I first started, there were so many different stocks I seen that I liked, or companies I didn't know that had stock because I was green. I didn't know anything. And what happened was I would buy a stock today, and tomorrow I'd see something else, and I'd jump out of that stock and buy the other stock because I didn't know how that worked. I didn't want to have too many stocks in one sector. I didn't know about ETFs. I didn't know about index funds. So it was a lot of things that I went through that I didn't know. But yeah, you want to gain your valuable experience now while stocks are lower, and it gives you time to study. Hey, you might buy your stock, boom. Say you buy Microsoft. Then 3 months from now, something happens and Microsoft goes down another $25, which might be 4 or 5%, right? Always remember, in any given time, any given year, the average stock will go down up or down 50%. So if you're down 5-10%, and then you're looking and you only put $1,000 in the stock market, and something goes down 50%, and like your value is $500, you don't panic. Just wait. Stay the course. You have a plan. You got to remember, it's fluctuation. Other people are trading. Other people are doing things. Institutions are doing things. It's not affecting you like that. You have a plan. You've done your research. You have the patience, have the stomach. Move forward. So remember, continue building your positions. If you're in the market already of your favorite stocks, if you're a dividend investor like myself, the dividend stocks you're buying, continue to build those shares. You got 10 shares. Next goal is to get 15, then 20, then 25. Because remember, you're multiplying that dividend every time you add shares. Now, if you're going just for growth, is another thing. With the market sinking, when the market usually falls, your growth stocks are the ones that are really falling the hardest. This might be a time to pick those up, because when it turns green in the bull market, them growth stocks take off, and that's when you'll see astronomical gains in your portfolio. Right? So, yeah, I just wanted to chime in a little bit, guys, and talk freely. I mean, it's still early in the morning, but yeah, if the video was educational to you, leave me a comment, or if you got anything you want to say about the video, drop me a line. As always, I upload virtually every day, and I look forward to hearing from you. Remember, like and subscribe. The subscriptions have been going up too, so I appreciate you guys helping me grow the channel, and I'll see you in the next video. And remember, you don't give up. Don't listen to naysayers. This is where you need to be. Jump in it and stay in it. And I'll see you in the next video. Happy investing. Take care.